Hi, my name is Danny Brown. I'm the CEO of Myriad Real Estate Group, and this is going to be our November market update. The year has absolutely flown by, and I feel like I just talked about the month of October and what to expect. So it's going by pretty quick, but as for the housing market, it is not going quick. The housing market is extremely slow right now, which is fairly typical as we get into the holidays. We see a run-up in inventory, people trying to catch that fall listing time frame, get their home listed and sold before we get to the holidays, and then it really starts to slow down. So we are seeing that slowdown in the market, not a ton of activity. I'm still preaching to our sellers that if we're averaging about one showing a week on a single family home, we're doing very well. If we're a townhome or condo and we're averaging one showing every 3 to 4 weeks, we're probably doing pretty well. This is all pretty normal and something that we see as part of our seasonality in real estate, so I don't think that it's anything to get scared about. The good news is mortgage rates are at almost 2-year lows. So they have come down substantially off their highs, and pretty much anyone buying a house should be able to get an interest rate with a 5 in front of it. So we're into the high 5s. That's going to be, with FHA financing. If you are conventional, you might need a little bit of seller concessions to help with a rate buy down. ARM products right now are fantastic. So rates have come down and you're looking at most deals with a 5 in front of it. So if you've purchased within the last 2 years, this could be an opportune time to do a refinance and get into a lower rate. And if you're looking to purchase, the market is slow and you have a lot of options out there, and you have a better mortgage rate right now. I do think that this is going to be sticky, and I do think that rates are going to remain in this lower environment. The 10-year has been testing lows pretty frequently, and it's around 4%. So we have had multiple days where the 10-year has fallen below 4% and closed in the high 3s. As of this recording, the Fed met today, and the Federal Reserve cut rates by 25 basis points, but Fed Chair Jerome Powell's tone was a little bit hawkish, and that caused the 10-year to actually go up. So now we're back up above 4%, but not drastically. We're still hovering in that low 4% range. So that is telling me that the markets are acting the way that they should, and that we are more than likely not going to see a push up in the 10-year causing mortgage rates to substantially go higher, and that the markets are really prepared now for future rate cuts and for more like easier monetary policy, which will have a positive impact in our mortgage rates. Usually with the public, when we have lower rates like this, everybody sits on their hands in a rate environment, whether rates are coming down or going up. People just hate unpredictability, and so rates need to stay where they're at with some duration to start to see buyers return to the market. So what we're seeing right now is a slow buildup in inventory. Part of that is seasonality. I do think some of that is probably rate driven as well. Sellers acting and seeing the lower rates and wanting to make a move. But what I do suspect that we will see is come Q1 of 2026, we're going to see a lot more inventory come to market. But I also think we're going to see a lot more buyers come to market. I think a lot of people, as they always do, wait to get through the holidays, and then come that 3rd, 4th week of January, we will start to see a lot more activity in the housing market. And what I suspect will happen is we will start to pivot back into a bit more of a seller's market from this long buyer's market that we have been in. So the buyer's markets in Phoenix are usually short. They don't happen very often. This one has been longer than most, and I think we will start to transition back towards a bit of a seller's market come middle to late Q1 of 2026 and into Q2. So what buyers can expect right now is huge buying opportunities. So we are seeing inventory increase, so they have choices. There is not a lot of competition out there for buyers, and rates have come down. So we have this kind of perfect storm that we are in where it is very, very favorable to buyers right now. So if you are somebody that has been thinking about looking or who is active in the housing market, this is kind of a really great time for you to have options, to negotiate contracts with sellers, and to still get your closing costs covered. You may not need a rate buy down now, but you can cover all of the costs for purchasing your property, lender fees, realtor fees, title and escrow fees, all your prepaids, all of those fees associated with buying a property. You can still get that covered by the seller because we are still in that seller's market and there's still more supply than there is demand. I think that our buyer's market will exist until we get it like maybe halfway through Q1. I think we're going to start to see a transition once we get into the new year like we always do. So seasonality, just looking historically outside of the COVID year, we always see more buyers return to the market in the spring. Sellers are selling who often turn into buyers, right? So that's a one-for-one trade. They return to the market in the spring because they want to upgrade. I have several friends, several clients that are like, we want to sell 2026 the year. We want to go ahead and list in the spring. I have some sellers who are listed now. They're considering pulling the home from the market during the holidays and then relisting in the spring next year. So I think you'll probably see some of that too. If you are a seller and you have the ability to wait until the spring, probably a good idea. It's just going to be a better market for you overall. But if you are not in a position where you can wait until the spring and you need to sell now, it's the same thing that I've been saying before: price, presentation, and patience. So you have to price it accurately. Buyers do not care what the home down the street sold for or when. They're wanting to see things priced aggressively and fairly, and they're wanting to have it be presented really well. So your home needs to be clean, it needs to be updated, it needs to be taken care of. They're not willing to overpay for things that need a ton of work. And if the home does need work, that's fine, but recognize that that pool of buyers is relatively small right now, and it's just going to take time to sell. So the 3 Ps that I have been preaching for a while is price, presentation, and patience when it comes to selling a home. So if you've been on the sidelines as a seller, that tide is turning, and we are going to see buyers return to the market. Again, we can look historically at this over the last couple of years. When rates have gotten down to 6%, we see an increase in demand, and we are seeing that. It's just slow because of the time of year. So sellers can expect a change in this market. It's not going to be like a light switch, but it is happening slowly to where I think when we get into that spring, we will be shifting back into a seller's market. Now, nothing like we saw during COVID, where every home has multiple offers, but you can expect to do less in concessions, less maybe negotiating on price, and just a little bit more fair and balanced of a market. There is always going to be a ton of doom and gloom when it pertains to the real estate market, and a lot of those people that post that stuff are incentivized by getting clicks. And if it bleeds, it leads. And a lot of these people, if you look back, have been saying that the housing market is going to collapse. There's a bubble since the last one in 2008, and it hasn't happened. And it's not going to happen. There is so much information available to us that we would see this coming from a mile away. And recognize that the housing market is not the stock market. It is not going to go up and down as quickly as that because people need places to live. They don't need to have stock. Like, I cannot get on my phone and sell my house in 30 seconds. It takes time, where with the stock market I can. So you see those violent swings when people get nervous and they can sell really quick. Homeowners aren't like that. They don't sell to be homeless, and if there was a foreclosures coming, we would have so much lead time to see the delinquencies building up, and we're still not even to pre-COVID norms when it comes to that kind of stuff. So we're still in a very favorable environment for housing, and most of the stuff that we're looking, when you look at it historically, is extremely normal. If you cut just basically statistically over the last 2 years, then sure, then things look a lot more dramatic than they are. But if you stretch that timeline out and you go back years, it is very normal. This is a very normal market for the most part in terms of inventory, number of buyers, it taking time to sell homes. we're just not used to it because the last couple of years have been so strange since COVID. I say this all the time, and it's my final point. Do a real estate transaction when it makes sense for you and your family. You can't time the market. You know, most people care more about what their monthly payment is versus what their interest rate is on their mortgage. So just when it financially makes sense for you and your family, whether it's selling or buying or both, that's when it makes the most sense to do a real estate transaction and kind of just ignore the noise. If you have any questions about the housing market, where we're at, where we're going, let me know. Leave a comment below, and don't forget to give a like and subscribe, and I will see you next month.